So, welcome. I think this today's webinar, Bobby, it's all about the future of funding deals and finding investors. Like, how does that look like? And we have today, along with Bobby Sharma, he's a co-founder and VP Business Development for Connected Capital. He has more than 10 years of experience into real estate industry. He has expertise into scaling into real estate ventures, funded the largest real estate network group in San Francisco and Bay Area. Okay. He is really been instrumental in scaling several real estate companies, and he work in investors in multiple prop tech companies and helping managing five different real estate funds. Okay. That's all about Bobby. I would love Bobby, you to talk about yourself, introduce you, and go from there, Bobby.
Thank you, Ramesh. Thank you, Vishaka, for the invite. My name is Bobby Sharma. I spent about 31 years in Northern California. Got started in real estate pretty early. When I was 24, I got the bug to get into real estate. Bought my first house in Southern California, but spend most of my time in Northern California, and then I was just buying, single homes, flipping them or renovating and renting them out. But it wasn't until 2010 that I got serious about investing in real estate after the great financial crisis. So the GFC,
Mm-hmm.
saw that properties values drop a lot and stepped in a little bit. I wish I'd stepped in a little bit more, but got involved. And then I became an LP I started running a real estate meetup group, which is now grown to be over 5,000 people. But that's where my journey started, was with just connecting with other fellow real estate investors, building a community, and then investing with those fellow real estate investors. So
Mm-hmm.
people, that were presenting. So my first investment was as an LP in a mobile home park, and it just turns out that the person that I had invited to present was a mobile home park operator,
Uh-huh.
and I looked at his deal, and I
Uh-huh.
became a small investor in his in as an LP in his deal.
Okay.
Then later on, I became an asset manager for the same mobile home park for about 6 to 9 months.
Mm-hmm.
And then I became a co-GP. At that time, that was the only other option available. So I became a co-GP in some multifamily deals and in mobile home park.
Okay.
Uh, and then of course, as we progress, then I became a GP for a couple of deals in Southern Texas.
Mhm.
And then about 3.5 years ago, became a fund manager. I didn't think I was going to be a fund manager, but it turns out that it worked. It was a good option. So I became a fund manager,
Mhm.
and it's that fund is running really well. We're growing.
Uh-huh.
Um, and then the last big step that I took was launching Connected Capital
Uh-huh.
dot fund, which is a community of fund managers. So yeah, that's a little bit about my story.
Great, lovely, great to know this, Bobby, altogether. So I think, I would really love, Bobby, to know about your personal journey. Can you share your journey in a syndication, as you said, how the industry has evolved since you started over a decade ago? And if you compare that, a decade ago journey, and then versus now, so that kind of a thing. So, there's budding fund managers, I can say, or bidding aspiring syndicators, or this real estate developer. They can really understand and learn from your experience, what you have gotten over a period of last more than a decade time, Bobby. That would be really helpful, Bobby.
Absolutely. So
Right on.
things have actually, so a couple of things. 10 years, or well, maybe even 12 or 13 years ago, after the GFC, if anybody had gone into real estate, they could have made all kinds of mistakes and still survived. They could have done really well in spite of having made a lot of mistakes. So what's changed now is the interest rate environment, the competition, the sophistication has changed. You could say for the level of sophistication for the investors has grown a lot. What's
Uh-huh.
not helping syndicators and operators right now is, there's a lot of data, so there's less, there's more efficiency in the market. But the biggest elephant in the room is just the types of loans that we have to deal with as syndicators now. It's a
Mhm.
very challenging environment versus 12 years or 9 years ago, when you could get really, really attractive loans. So you could make, as an operator, all kinds of mistakes with property management, with the repairs, and still be okay. Still be okay. But
Okay.
now it's very, very difficult. So the environment so now you have to be a lot more sophisticated. As far as LPs are concerned, LPs are now more knowledgeable, versus, let's say, 12, 13, 14 years ago. LPs were like, okay, I like this guy, I like this team, I like this market. I'm going to put 100,000, 150,000
Mhm.
into the deal. But now the LPs ask a lot of questions. They want to get to really know you as an operator, your reputation, your asset, your market. They know, they have a lot of data at their fingertips. So the sophistication of the LPs has grown a lot.
Yeah, I think, can I say like this, Bobby, then like, the investors, okay, they're more educated now, and along with investors are educated. Not only they are educated, but they have more options now. That's the another parameter which exactly whoever is coming as a fund manager or as a syndicator or as an operator or a real estate investing company, they really need to take care of those things, that what the competitors are doing, how you are representing yourself, and what is out there, and then they have to put forward their maths. Do you need to say that kind of a thing? Can you elaborate on that, Bobby, a bit?
Yeah. So as far as like the sophistication, like there's a lot more tools and a lot more data available at their fingertips, um, versus, before. There's more um, exchange of knowledge between LPs. Now there's a lot of groups, that share knowledge about the operators. And if the operator is a little shady, a lot more people, I'm not going to say everybody knows about it, but a lot of people know about it. When an operator suspends distributions, for example, before, no, only the LPs in that deal would actually know that there's a suspension of distributions. Now a lot more people know that there's a problem with the operator or with the property. So
Yeah, I
yeah.
think probably, Bobby, one more point to talk here could be like, now the information is pretty easily accessible to everyone. Okay. So uh, investors are smart. They're taking smart move. They have enough information on their fingertip, so they know where to invest, where not to invest, how to take the information about somebody's credibility, the fund managers or operators who are there, okay, and how to make a decision about investing along with that one particular investing opportunity. So I think that is something has really evolved over a period of a time, comparative with few years back probably, and right now the way it look like. And as there are many options, specifically, Bobby, which are available right now for anyone or everyone to go and invest along, because everyone wanted to the syndicators or fund managers who are out there, they want to acquire investors. So everyone is trying every day how they can be more better than another one, you
Yeah.
know That's
Yeah.
how it.
So no, yeah, the operators are getting they're getting better.
Mhm,
At the same time, there's almost an information overload, right? So now that you have marketing companies like yourself that are promoting syndicators, and there's a lot more deals that show up in, let's say, an LP's inbox. Let's say you're a doctor in Frisco, Texas, and
mhm,
you've signed up to become an LP in a couple of deals. Well, that information is shared, across many people know about that across many different syndicator groups. So now
mhm,
you get bombarded with deals, and as an LP, it's very challenging to look at all the deals and crunch the numbers, whether it's in Des Moines, Iowa, whether it's in Chicago, whether it's in, Nashville. How are you going to know all those markets? And it's overwhelming, right?
yep,
So
yep,
the biggest part, the most important aspect for an LP, and I'm speaking from not so much from the syndicator side, because the
mhm,
data from the syndicator is often sugar coated, right? It's kind of, it's like the best possible outcome. Your equity multiplier, your IRR, all of those are presented in the offering memorandum. That's
mhm,
usually sort of the best case scenario. Not always, there's underwriting that can be done to help, and they share their underwriting. But in our case, for example, at Connected Capital, or for any LP, they have to go back and do the underwriting all over again. So whether it's a mobile home park, whether it's a triple net lease, whether it's a office building, whether it's an apartment, whether it's a value add, whether it's a ground up construction, whatever, you got to crunch those numbers. So as an LP, you got to become an expert at many different things, which is almost impossible. So that's why at Connected Capital, we share the underwriting. We actually do the underwriting for our fund managers and for our LPs. We take care of about 80% of all the deal flow in our community, and we do the underwriting for them. Because if you're a busy professional, like I said, a doctor in Frisco, Texas, or an engineer in San Jose, California, or a nurse in New York, making good money. You got your job, you got your family, you got your gym, you got your things to do. You're not going to sit there for 6-7 hours to do the underwriting on a mobile home park in Charlotte, North Carolina. uh
okay.
so that's where we help out a little bit.
Okay, and good to know. Good to know. So I think Bobby, I have one more questions for to go across to you. So what are the sectors or asset classes do you see as the most promising for upcoming time for operators, syndicators, fund managers in next 3 to 5 years, where probably the syndicators and operators come along with the investing opportunities which can be presented and very lucrative for the investors so they can stand out basically. So
Right.
I would really love to hear your point of view. So there's people who are out here in this room, they can really focus on that moving on if they want to differentiate themselves from people out there. They can really focus on that, those kind of asset classes. And ultimately that it's not only asset class, but it's again what kind of a value add you are offering altogether to the investors. So if you can talk on that, I would love to hear on that thought.
Sure. So for me, the most okay, so because I'm mostly a real estate investor, but I also come from a technology background, having worked in Silicon Valley for about 25 to 26 years.
Mhm.
Uh, so for me, what's really interesting is if they can solve the workforce housing problem. The challenge with workforce housing is the tenant quality is pretty low. Uh, it's a very challenging tenant base to work with, but that's where the highest returns are,
Hmm.
uh, if you can manage it. So I would say it's a slightly higher risk but higher reward, but it's a complicated business. The problem with the sort of the A-class properties and like the newly built in an affluent neighborhood, the cap rates and the returns are so low,
Uh-huh.
unless you end up holding for a long time. But there you'll have lesser headaches. So it really depends on what you're looking for. Are you looking for greater ROI, or you're
Uh-huh.
looking for, patiently being in an affluent market with a newer construction,
Mhm.
better quality tenants. Workforce housing, a lot of companies have succeeded at it.
Uh-huh.
But it takes a lot of patience. It takes a lot of automation,
Uh-huh.
having the right tools, the right staff. It
Mhm.
it it sometimes doesn't work if you're doing it on a small scale, but if you do it at a reasonable scale, workforce housing to me is good. Uh, I'm a landlord across many different portfolios. They keep saying there's a housing shortage.
Uh-huh.
I don't see it. Vacancies are hard. I mean, to fill. If you're a landlord,
Yeah,
and
can I add to this,
yeah,
Bobby, specifically? So, see, I have observed that, so vacancy rate is always high, you know, but Bobby, the key over here is how good your property management company, probably along with you, who is managing your tenant, or you have an in-house marketing company who can fill out your vacancy rate quickly. So you have a people who, like, associated with several brokers. You have a team who is specifically, like, looking around for it, like, doing a digital marketing and putting ads, and then, getting vacancy fill out quickly. I mean, you are there. That is what is needed. Your own network has to be phenomenal, probably. So I think, one important thing, probably, to add on, you should really have, in order to, whether you want to acquire investors, Bobby, or whether you need to acquire tenant. If you have a good marketing team along with you, you can acquire investors. At the same time, you can acquire tenant for your facility as well, because this two people can constantly market, and that's
yeah,
how, you can keep filling up the tenant. You can keep filling up the, like, the gap between the amount of a capital which you supposed to raise. And not only that, Bobby, probably, if you have a good product, it need to have the eyeballs. You
yeah.
have a good investment product, you need to have the eyeballs. Until and
I,
unless it goes in front of the eyes of the investors, they see, and that has to be represent as well. It's not like that, say, hey, look, I offer 33% of a IRR. Okay, there are many people who offer, but then what is the credibility? What is the authority look like?
yeah,
Anyone who see, oh, 33% returns, great, but a second thought immediately into the investor mind is this: there is a catch. There is a catch. Should I fill this form? Should I talk with this guy or not? There's a fishy thing. That's how
yeah.
it works. So I think, probably, Bobby, syndicators, operators, fund managers, and real estate investment companies have to build their brand, their credibility parallel to generation or acquiring of the investor base. That is
I,
needed. I think,
I,
yeah, go ahead, Bobby, please.
no, I agree. I agree. You need marketing for tenants and you need marketing for investors. So you gotta spend the energy and the time and the resources on marketing to investors. If you're building a syndication, you need LPs in your deal. So again, I go back to connected capital. If you're a great syndicator with a track record, then connected capital will help you with signing up. We'll bring the equity capital, part of the equity capital to the deal. If you're a syndicator with a great track record, with a great asset, And of course, we use Orion for marketing for or connected capital.fund. It's been a great team that we've been able to work with. A dedicated team that helps us with our online presence and our website and our CRM and so on. So I would say, yeah, you got to spend the time and the money. You got to allocate some money for marketing to tenants because it is a competitive market when you're looking for tenants and high quality tenants and so on. You can't just depend on your property manager to do all of that marketing.
Exactly, exactly. You see, I have saw many vertically driven organization who are much more successful, rather than horizontally. Vertically driven organization, they manage their property, they manage their tenant, they have an expert for each one of the thing, Bobby specifically, and those are having really great ROI for their investors, and investors always want to work with the organization who has vertically integrated organizations. That is what I have seen past 9 years. We have worked with a lot of vertically integrated organization, and the conversion rate of the investors who invest along with that, Bobby, is phenomenally high. If we generate close to 100 investors, at least 40 investors go ahead and invest along with them because they are vertically integrated. Not only vertical integrated point is important, but along with that, their credibility, their track record, you know how they talk with their investors, how they frequently communicate with their investor, Bobby. Much more things. There are tremendous moving point, guys, are involved in order to any investor to go along and invest. uh, I have a client who came in. They don't have a much larger database, but just word of mouth. But if you want to scale up, if you want to go grow big, Bobby, I think you said that very well. You really need to have a done marketing, branding, brand awareness, positioning, okay, for your investor acquisition, and at the same time for your property management or tenant management kind of a thing, Bobby, altogether. That's the greater message to this audience I can give it to altogether. And just to add on, hey guys, you can ask any question at this point of a time to Bobby and me. This is a conversational webinar. We are not gonna share big sheets and kind of a thing. Any question, they can just unmute and ask it. We love to answer your question, or you can type in into the chat as well. Yes, Bobby.
Perfect. Yeah, yeah, yeah. So, I mean, and Ramesh, this is a question for you. Like, as far as like, how are you supporting your kind of newer, so there's the established, you talked about the people with the vertical integration, right? I mean, those are established players, but there's also some people that are just entering the business, right? They may not be fully vertically integrated. So how do you support those folks?
I think the biggest thing what required for the one who is starting new or a scratch or they're a startup, one biggest message for them is it is a long-term ball game, Bobby. If they come in and they want a easy success or a quick success within a 3 month or a 6 month, 9 month, this is not going to happen. They'll fall down, they'll get up, they have to go again it. They have to check which piece is missing out, correct that piece, go ahead from there. So that's the one process which is much more important, and there they have to work a lot. But obviously, have a mentor, like a connected capital kind of a thing, a group of network or a group of people who support, and they're specialist on each and everything, Bobby. If somebody need to have support on underwriting, so you does not need to go ahead and find someone who is doing underwriting. Get a mentorship, get connected people with like a connected capital, so you can get a lot of knowledge. It's all about how soon you can get a greater amount of a knowledge, okay, which you can get over a period of next 5 years if you be with the similar mind people, talk with them, gain that expertise or experience and put into your business. That could help a lot, Bobby. That is what my first suggestion to them is?
Yeah. I'm assuming a lot of the folks in this group are syndicators. You know, I would say, you know, l- take a deep look at your financials, right? You know, sometimes every deal is attractive, but recently in the past, I want to say 3 years, there's been a lot of blood in the water in multifamily and commercial, commercial real estate as well. I mean, office space.
Mhm.
Uh, we just invested in an office building in San Francisco.
Uh-huh.
At pre-COVID, it was worth that building was worth about 101 million.
Uh-huh.
Uh, our group was able to pick it up for about 25.7 million. Um, and it's because, COVID, so when there's a crisis, it presents opportunities, right? So right now we're going through a crisis. You may not see it, but there's a lot of apartment buildings, a lot of operators that are in deep distress. And your job as a syndicator is to uncover those opportunities. They're not easy to uncover because the banks don't want you to know about them. It's sitting on their balance sheet, but they're trying to work with brokers off market to offload those properties. But there's some huge discounts available if you know how and where to look. If you do find an amazing opportunity, we're here to help at Connected Capital. It's connectedcapital.fund. You come in and you present your deal to our fund managers, and if they like it, if at least 5 or 6 fund managers like it, we'll help raise capital for that deal. But it's got to be an amazing deal with an amazing team. It's got to be, we're we're looking for experienced operators at this point. But as far as emerging opportunities, I know you asked me a while back, Ramesh, like I see opportunities in prop tech. I
Mhm.
see opportunities in applying AI to real estate. There's a lot of things that happen, manually or very slowly, the old-fashioned way. But if
Uh-huh.
you can apply, and if there's a company that can figure out a bunch of those things, then you have something to there's opportunities in prop tech, in AI for real estate or AI in general. But there's a lot of um, fluff also. There's a lot of buzzwords being thrown around with AI, and it's promise, but it's yet to be proven. But yeah, that's where I see a lot of opportunities.
Absolutely. So hey guys, as I said to you, you guys can ask questions if you have anything. We would love to answer them in between. So we can start our question and answer session. You can jump in, you can have it, Bobby and me can answer you. So meanwhile, they come up with a question. Bobby, how exactly, let's say, Connected Capital, you are a part of the Connected Capital, and how Connected Capital can help out, this budding capital manager, fund managers or syndicators or operators specifically, why they should, be go ahead and speak with anyone in Connected Capital. Bobby, can you speak a bit on that?
Yeah. So there's two audiences for us. There's what I call people with capital, which is usually fund managers or fund of fund managers. There's different terms being used for them. There's capital allocators, fund of fund managers, high net worth individuals. So those are usually the common terms that are used for people with capital to deploy. On the
Okay.
other, so those people are looking for great deals, great operators, great markets. Um, then there's people that need equity funding to launch to acquire that asset. So they need to come to a place like Connected Capital, present their deal, and then the folks that have capital to deploy, they will deploy capital. So in 2024, we launched early 2024 officially. And we've raised for about 9 deals, and we're raising for our 10th as we speak. and we've raised over, a 10.8 million is what we have raised so far for the 9 deals. We'll probably go over, 11 million, 12 million this year. That goes into, we invest with great operators, with a great asset, great track record, and so on. But again, if in this audience, people are either high net worth individuals or they want to become fund managers, then talk to me. Ramesh or I will put out my contact information. Or if you're a syndicator, then come and present your deal to our fund managers, and we can help you there.
So you mean to say that anyone who have joined over here, specifically Bobby, you can help them with getting their deal funded. If they have a particular deal, they can present to your network and get that capital raise specifically. That is a one thing what Connected Capital is great at.
Yeah,
Is that Bobby?
yeah.
And the second fold of it, it's a twofold kind of a thing. So what is the second fold on that, specifically? Or is it a part of a network, or how does that?
We're just individuals, fund managers, high net worth individuals,
Mhm.
uh, and and every fund manager, every high net worth individual invests independently,
Mhm.
but we help do the underwriting. We help pre-vet, evaluate the deal. Um, um, so um, So basically, we take the burden. So the least sexy part of being a fund manager or the high individual is crunching all the numbers, validating the data, looking at the legal PPM, looking at the assumptions that the operator has made, looking at the market, what's the crime rate, what's the school district like. Um, Um, so that number crunching is really, really important, and it cannot be overlooked. But sometimes LPs and fund managers, they meet somebody at a conference or at a networking event, and they like the PDF that they received. Well, it's the PDF and the assumptions are flawed, and they will end up losing their money.
Oh,
Uh, I would say the better approach is in a group, do the analysis together. And then if you see that 10 other people, 10 other experienced fund managers are raising capital for that deal, then you can have a higher degree of confidence in that deal. So anyway, but yeah, that's a little bit about connected capital.
so I think, Bobby, we covered a lot, but just at the end, I would love to, address to people who joined this webinar today. My name is Ramesh. I'm a CEO for Orion Digital. Okay. And we've been working for syndicators, capital raisers, fund managers, real estate investing companies from past 9 years. Bobby is one of our client. We helping these people. So we have worked more than 500 plus companies overall, and we have raised help companies raise more than 9 billion in capital totally. So as we help getting tenant, we help getting investors, raising capital, end-to-end digital marketing from content creation to webinar to podcast to live event, making sure that investor is coming in front of you and speaking with you, that everything we handle for our client. And I think, in this entire journey, we learned a lot, Bobby, specifically with our experience. We know that, what exactly required, what exactly every investor is looking for, and what to give him. So we can actually support syndicators, operator, if they're making any mistake in their offering, how they're taking their calls with the investors, what they're pitching in, what is their PPM look like, what is their offering memorandum look like, what kind of see earlier. I'll just add this last point. Earlier, there was a simple returns what every investing company or syndicator is offering. You invest 100K, you're gonna get this many returns. This is a hold period, and boom, that's it. Now every investing company comes with a different options, 3 to 4 different options. You invest 50K, you get 7% return. You invest 250K, you get 12% return. You invest half a million, you got 15% return, cash on cash. N number of things, different options we have created. So those all things, Bobby, we came up with those ideas that this is how you have to offer your product and all those kind of a thing. So it's fantastic, Bobby, to have you this morning. Our audience has really benefited with the inputs which you have shared across. Your knowledge has extensively helped out our audience. I hope this is very productive for all of us, Bobby.
Thank you. Thank you, Ramesh, for having me. Thank you for making the time, and nice to meet everybody here that's on the call. Hopefully we'll see you at some point in the future.
Yeah. Thanks a lot,
All right.
guys, joining
Thank you,
this one.
Ramesh.
We'll
All
call
right.
it.
Okay. All right. Thank you. Thank you. Thank you.
Bye.